Good evening. It is time for today's Tax Talk. I am your host. I'm attorney Stephen Leahy. It is Monday, March 7th, the year of our Lord 2022. I had a lot of stories lined up. As if you're a regular here, you know that I always Google IRS or DuckDuckGo IRS to find out what's in the news. And so I was going with some stories about the IRS and their surge, hiring another 10,000 employees. But something else became more important, and that's the reversal of that $600. There's a bill to reverse the $600 Venmo reporting rule, and that's what we're going to talk about today. Won't you join us? So yeah, this is pretty important. I think if you remember that the Affordable Care Act, or Obamacare as it's been known, had a provision where every company in America that did more than $600 with anybody in business for goods or services, for anybody, was going to have to report a 1099 on that person in order to track all their spending and then all the income on the other side. And that would be very intrusive. Okay. Now, that provision of the Affordable Care Act was not set to be in effect until 2012. But this was the bill. The Affordable Care Act was the bill that Nancy Pelosi famously said, we need to pass it to find out what's in it. Well, when they passed it, and people found out what's in it, they immediately reversed course. And that provision, which was set to be implemented in 2012, was reversed in 2011. So it never got implemented because it was reversed. And it was because it was an onerous, a huge reporting requirement on all America. Now, I've kind of explained this before, and one of the reasons why they would repeal it is they didn't need it anymore, right? Because when implementing Affordable Care Act or any bill, it has to go through the Congressional Budget Office, and they score the bill of whether it's going to increase the deficit, and when they spend money, they being that was interesting. I forgot to plug the computer in, and then it can't function without. Well, now I think it's still going. Well, we'll see. Anyway, so I failed to put to plug the computer in, and the battery went out, and it stopped. So I think we're still streaming. I understand that we are still streaming. Let us see if we are still streaming. Says we are. Okay. So anyway, as I was talking about, the Affordable Care Act had that provision in it. As soon as people found out what was in it, they reversed it. And as I was mentioning, they didn't need it anymore because they had already passed the bill, and they had the spending in the bill. And those the provisions that offset the spending that made the Congressional Budget Office score it, those were eliminated. So they didn't have the income portion, but they still kept the spending. And that's what all of these provisions, these gimmicks, as they call them, are in these bills to offset the spending. So once they get the bill passed and they're spending, the gimmicks are no longer needed. Now, don't get me wrong. I think Congress wants to collect that money, but they're not going to go through political turmoil in order to keep that provision. It's already served its purpose. Very similar here with the American Rescue Plan. The American Rescue Plan was to help Americans rescue Americans from the pandemic. And so there was a lot of spending in that bill, and they needed to offset that spending. And one of the Venmo provision of $600 or more. We saw that the bank statement reporting, which was in the Build Back Better, was a much more ambitious undertaking because there was a lot more money that they needed to raise. And that was one reason why that Build Back Better plan never went through. Well, now, because the Venmo has now been is out there and everybody knows it's out there now, then there's a lot of pushback. And so that's what we're going to talk about now. There's a bill in Congress to repeal this Venmo $600, and it's not too late to do so, in my opinion. So here's the story. Senate GOP pushes repeal of Biden's $600 IRS reporting rule for online payment platforms. A cadre, I like that word, a cadre of Republican senators is moving to overturn requirements that third-party internet platforms report transactions of more than $600 to the Internal Revenue Service. GOP lawmakers say that requirement, which was included in President Biden's coronavirus relief package last year, burdens taxpayers when they file their annual returns. Well, of course it does. The Biden administration is relentless in their attempt to invade the privacy of Americans' lives and finances, said a Tennessee Republican. It is regrettable that this administration insists on advancing their frivolous and oppressive political agenda to the detriment of taxpayers' privacy, heedless of their failed track record of protecting Americans' confidential information or data, he says. Mr. Haggerty and 6 other GOP senators have written to stop the nosy obsession with online payments, or SNOOP. The bill would repeal the $600 reporting requirements for online third-party payment platforms such as PayPal and Venmo. If the Republican proposal were enacted, the threshold for the IRS reporting would return to the previous standard of 200 commercial transactions per year that exceed $20,000. So it would have to be 200 commercial transactions and more than $20,000, because that was the rule before. And again, that's pretty obvious that you're engaged in some sort of commercial enterprise. Lawmakers say the old rules were efficient in capturing income and monetary transactions that might require IRS purview without adding undue burdens to individual taxpayers and small businesses. The IRS spent much of last year trying to get access to more information about taxpayers' bank accounts, said a Wyoming Republican. Now they are forcing PayPal and Venmo to put even more burdens on small businesses who use these platforms as a cost-effective way of doing business. Under the new IRS regulations, hundreds of thousands of small businesses must disclose all transactions of more than $600. The requirements cover not only commercial enterprises, but also individual taxpayers who sell personal items via sites like eBay or Poshmark. It is past time we stand for the small business owners and say no more snooping to the administration's egregious and unwarranted overreach. Democrats have defended the IRS reporting requirements, arguing that the hundreds of thousands of dollars of income go unreported annually. Those payments, according to Democrats, help fuel the gap between taxes owed and actually paid annually to the IRS. The tax gap. We talk a lot about that on this program. Well, a well-functioning tax system requires that everyone pays the taxes they owe, said the Deputy Treasury Secretary. Overall, the administration's compliance initiatives are guided by a singular objective: bringing about an end to a two-tiered tax system. That's just more hyperbole, as we could say, where ordinary Americans comply with their tax obligations, but many high-end taxpayers do not. That's not who this is going after. You think Bill Gates is using Venmo? PayPal? I don't think so. That's not what's going on here. They're not going after the high-income people. They're going after everyone, because that's where the money is. Advocates disagree. They say the new reporting rules will fall heaviest on small businesses and individuals looking to make a few dollars here and there. People who have a side hustle, like independent contractors, all of these people are being swept up. said Grover Norquist, president of Americans for Tax Reform. It will affect your taxes this year. It certainly will. Now, that doesn't, again, this money that they're saying that they want to tax, that's already taxable. And so maybe it's not reported. Some of it might not be reported. But that money's already taxable. So that's not really the issue. Then the issue is how much more burdensome are you going to make individual tax returns? Remember, the 2017 bill was really designed to reverse and make tax. Remember, they talked about making your tax return a half a piece of paper. And that just said, here's what I made, here's my tax, here's my signature. But that hasn't really happened. And it can't happen with this type of thing because there's the 1099s and you have to report all that and you have to find places to explain it. And so it'll do exactly opposite of what the 2017 bill proposed to do. Okay. Opponents also note that the $600 reporting requirement will make filing taxes more complicated and expensive at a time when the IRS is besieged with document backlog. President Biden claims he isn't going to raise taxes on those making less than $400,000, but by increasing reporting requirements for small businesses and independent contractors, the cost of doing business just went up. Last year, Democrats were forced to abandon an even more ambitious reporting proposal that would have given the IRS access to bank information on customer accounts with more than $600 in annual deposits and withdrawals. Well, again, I think that made sense. See, well, let me go back here and just say this. Here's another story. This is Grover Norquist. He is with the Americans for Tax Reform. State lawmakers try to push back on IRS snooping agenda. So state lawmakers are stepping up against some. Let me make sure this doesn't start. Okay. State lawmakers are stepping up against what some see as an attempted power grab by the Internal Revenue Service. The Biden administration and Democrats in Congress backed off a plan to allow the IRS to monitor financial transactions of more than $600 per month. It wasn't $600 per month. And to monitor accounts that take in or spend $10,000 or more. It wasn't $600 a month. They went from the $600 limit for the year to a $10,000 limit for the year. But I mean, who has a checking account who doesn't do more than $10,000? Almost everybody with a checking account goes over a $10,000 limit. So I don't know where this comes from, where they say $600 per month. That was never the proposal. However, the IRS successfully pushed a new requirement to require users of payment apps such as PayPal, Venmo, and Cash App to report commercial transactions totaling more than $600 per year. So far, resolutions in Arizona, Florida have advanced to ask Congress to stop such proposals from going forward. Okay, so the states are also getting involved in it. So here's the story I was going to talk about: the IRS to hire $10,000 in an attempt to cut tax returns. And there's the IRS unveils taxpayer experience office to improve customer service. Well, I think we all know that I think this is a short story. I think this one is a short story. The Internal Revenue Service intends on hiring 10,000 employees in an effort to address a backlog of nearly 24 million tax returns, the majority of which are from the 2020 tax season, the Washington Post reported. The sources told the newspaper that the move came after the agency was given approval for direct hiring authority, which removes some requirements within the hiring process. In an effort to speed up the recruiting. One person familiar with the plan told the Post that 80 types of positions ranging from tax attorneys to entry-level clerical workers will have their recruiting sped up. The people familiar told the newspaper that the agency is looking for technology professionals who can help update the infrastructure at the IRS, among other roles that the agency seeks to recruit for. The Post reporting follows another report that the newspaper published last month, which found that the IRS had a backlog of close to 24 million tax returns. In a letter to members of Congress in February, the IRS commissioner explained that the agency had been battling a number of challenges and this is always, this is where it comes down to, including a lack of funding to train and maintain staff and a lack of investment to improve their technology. The IRS pursued a significant actions during the 2021 filing season to address the return and correspondence inventory, but because the IRS lacked the resources it needed to reduce inventory to a healthy level, we are entering the filing season with a significant inventory of unprocessed returns and correspondence. Still, the backlog is not expected to be resolved until the end of this year, a government official told the Post. The development comes over a month before the tax filing deadline of the 2021 tax season. Okay, so again, I think that this is it's always about the money. The IRS needs more money. They always need more money. I get it. And again, I'm going to refresh your recollection. The IRS spends $14 billion a year. Last year, they spent more than $14 billion because they got other billions in supplementary funds for Corona. And so they spent, they had, I don't know, what $14 billion sounds like a lot of money to me. Maybe it's not enough. They have 80,000 employees now, 83,000, I believe. And so to add 10,000 more employees, it's not a small number. It's not an insignificant percentage. Remember, the Build Back Better plan wanted to add 85,000 new employees. That's right, 85,000. More than double the size of the internet, of the IRS, with more than $80 billion added to their budget over 10 years. So that's where they were going with it. So I just thought it was interesting. I'm glad that I always looked that up because this is an important story that I think a lot of people are interested in. I got a lot of interest in my cash back. I was on many radio stations talking about it. I'll try to get on more radio stations to push this SNOOP Act because it's important to get that people know it's out there. People don't, because I think when people understand that they might be able to reverse it, they will. They'll contact their congressperson and they'll get it reversed as they did with the Affordable Care Act. It can happen again, but we need to be vigilant. We need to get out there and make the change and tell Congress, this isn't right. We don't want this. They keep telling you that it's because it's to catch people from cheating. But it's not to catch the rich from cheating. It's to catch you from cheating. Even if you're not cheating, they're going to make you explain yourself. And that means harder, tougher IRS on you. We don't need a tougher IRS. We got a tough IRS. And that's this whole taxpayer experience office. We'll probably talk about that in the next couple of days. We'll talk, but remember, tomorrow now is crypto Tuesday, so we'll be talking about crypto, blockchain, and everything blockchain. So join us, won't you? Remember now, I'm going to ask you to like and subscribe. Like and subscribe. We need to get this information out to people. We can't get people to object to this $600 Venmo rule if they don't even know that there's an effort to do so. But there is an effort to do so. Help me get the word out. So like and subscribe. Remember, if you're fighting the IRS, very first thing you do, get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com, freeirsbook.com. Get a copy of my book, Deal with Your IRS Problem Today. So thanks so much for joining us. Remember, again, tomorrow is Crypto Tuesday, and we'll be back here talking about that. So I hope you can join us. Thank you.